This is Matt Bennett, grain marketing consultant with Channel, and today we're going to talk about the January WASD report. I'm joined with Matt Nelson, technical agronomist out of Iowa, and Matt, thanks for joining me on here. I was just going to kind of ask you, what's your thoughts at the outset? I know you've looked at it a little bit, and we're going to talk back and forth about it, but obviously a pretty interesting day so far.
It has been, Matt. Happy to be back with you. It's been a while since we've had a chance to catch up, so good to see you. Really, what jumped out to me was probably both carry out and also the yield estimates for corn. I guess carry out seems like a good place to start with you, Matt. I know that's probably something that jumped out to you as well.
Yeah, it is, and you bring up a good point with yield, because that obviously leads right into carry out, but carry out at 155, the average trade guess, Matt, was 1.6. And so as we talk, at the time that we're talking, the market's trading up the limit. And so 25-cent limit on corn. And last time we've had that, I don't even know when. It's been a long time since we've seen that kind of trade action in the market. And you would think with a carry out estimate, as close to the 1.6, that the traders guessed, maybe we wouldn't be trading that strong, but it sure is nice to see. And a big reason for that is that yield that you referenced, 172 yield, whereas we were above 175 previously, according to USDA. Personally, I've been arguing for quite some time that the yield needed to be adjusted lower. I didn't think that the USDA maybe would want to do that, but as well as I do that corn has been tight out in the country. Basis levels have been excellent. And I think that this report, is not going to be a major surprise to people who've paid attention to what cash prices have done and to how hard some of these buyers have had to push for bushels.
Yeah, no, I agree completely. I see the estimates interesting too, Matt, as we start to look at the rest of the springs, right? So most of the Corn Belt, we're in our dry months, December, January, and February, the driest 3 months of the year. And if you go to the Climate Prediction Center, most of the Western U.S. is in a pretty severe drought, and relief is not likely to come until March or April, and hopefully it does come. So to me, that 172 is interesting. And I guess one question I've been wondering too is, do we see that continue to move if we stay dry as we get into March and April?
Okay, so essentially the 172 was the 2020 estimate, and so we took the 2020 crop down. And the USDA says, as of the January report, we're done making adjustments on yield.
Yep.
And so that's what they call their final yield estimate. Now, can they go back and make adjustments based upon the year? Maybe not turning out what it was. And I know you and I talked previous to coming on here about maybe 2019 continuing to rear its head, into this corn situation. And so, I think it was a pretty well documented thing that me and some of the guys on my team felt like the USDA grossly overestimated the 2019 crop based upon a lot of the issues that we had in 2019. And so, this year, I think that's manifested itself as the year has drawn on. I think the USDA was essentially kind of hoping for a really big crop in 2020 to be able to gloss that over just a little bit.
Yep.
But unfortunately, they came in here in September for the quarterly stocks report and said, guess what? We didn't have near as much corn to bring in from last year as what we originally thought. Shocker, 300 million bushel difference. I wasn't surprised though. The problem that they had is that we had an extremely dry August and September in 2020.
Right.
And then now they've got a complicated issue. And so, to talk about the report today, I think a lot of people are looking back at that situation and they're thinking, what's going to happen this time around? Whenever what the USDA did today was they dropped yield and total production enough that you could get the carry out down to 155, even though they dropped exports 100 million bushels. Most of us in the industry were looking for exports to go up because exports and export inspections would suggest they should have gone up. They also dropped ethanol by 100 million bushels. Most of us in the industry felt like that would stay the same. And then feed and residual usage, very interestingly, was dropped 50 million bushels. So I think a lot of folks are looking at this saying, well, if the prices race up enough, maybe you do scare that demand away, because that's the function of the market is, to drive prices high enough to scare away demand, or to get prices low enough to incur demand. And so at this stage of the game, I think a lot of people are looking at this saying, hold on, maybe this doesn't quite work 100%. And so I guess from my vantage point, very interesting report, but I think there's a lot more to learn as we go. And as you would suggest, this spring of 2020, 2021, and the way that this crop manifests itself is going to be very, very highly scrutinized and closely watched, because we need a good crop now. We haven't been able to say that for many years, but we really need big acres, and we need big production.
And you actually rephrased my question a better way than I could have stated, talking about the spring conditions here. That's the analog that I wanted to draw. 2019 with the prevent plant acres, we weren't really sure about that estimate, and I think there is still some room to possibly adjust as you continue to evaluate this past year as we get into 2021. That actually leads me to my next question for you. So we think about demand being cut, and also exports being cut, feeding residuals, the change there too. What do you kind of see driving some of those decisions?
Yeah, I think essentially what the USDA said today is that, seeing the way that the market has reacted over the last couple of months, their guess, is that, for instance, profit margins in ethanol may not be strong enough to suggest that we would continue on the same pace. And maybe high prices are going to scare away export demand. But, the USDA has to hope and pray that South American weather improves enough that they'll be able to bring to the world table enough exports, because bottom line, U.S. corn exports have been very competitive, especially with the dollar being fairly cheap of late. Now, the dollar's rallied just a little bit over the last few days, which has changed that situation somewhat, but we're still looking at the cheapest and most readily available corn supply for anybody in the world trying to source corn. And so, I think that's essentially what the USDA is saying, is that high prices are going to cure high prices. And so that's part of the reason why they're trying to drop demand down a little bit. I think when you move over to, the soybean situation, it's even wilder, to be quite honest. You're looking at a 140 carryout, which, that's pretty much what the trade was guessing, but just verifying it, for the trade, I think was probably what, has driven the market to be so wildly bullish. Because beans have touched up, for 50, 60 cents as well. They've really raced higher, and I think that it's basically people hoping that maybe there was going to be some sort of a pullback in this market, but quite frankly, there wasn't. And so they just continue to buy the market as the market races higher.
Last question I kind of had on exports and global demand. We know obviously La Nina can cause some issues weather-wise. As we look globally, Argentina's not really exporting corn at the moment. I think Ukraine's got a bit of a short on supply as well. And China seems to be using a bunch to try to rebuild their, I don't know what you call it, the hog fleet, the hog herd, whatever your term is for it. I guess I do understand the reasoning with prices continue to go up, but what's your kind of sense there on what that export market might actually look like?
Well, the export market probably could have been adjusted up 150 to 200 million bushels today, and it was actually adjusted 100 million bushels lower. And so my thought process is that needs to be adjusted at some point, barring some sort of just cataclysmic shift, maybe cancellations of some of the sales that have already been made, and maybe once South America comes online and Brazil is able to produce a really big corn crop in that safrinha crop, which there's a lot to be known there yet. If that happens, then our exports are probably going to shut off. But the other thing we have to pay attention to, the last 3 days, the wheat market has raced higher. And part of the reason is that the Russians said that they were going to put a higher export tax on the wheat. And so a lot of folks in the world that are looking at feed grains, so corn and wheat, are saying how much is going to come out of that Black Sea region, which is Russia, Ukraine. Ukraine had a terrible drought this past year. And so, they've struggled to be able to put some of the feed grains out on the world market, whether you're talking corn or wheat. And that's done. There's been so many things that have happened to help us get this rally going, like 5 or 6 different things all fell into place all at once. if a couple of those, and one of them is weather issues in the Ukraine because they've become a major force in the world export market. If one or two of these things wouldn't have happened, would we have had a $2 plus rally in corn and a $5 rally in beans? Probably not, but they did. And so we've been the beneficiary of that.
When it comes to, I guess, staying with corn, Matt, as we think about the U.S. for this next year, I think one question everyone's going to ask is acreage going into 2021, and that may be a kind of a separate topic, but I do think it's important to think about in light of what the data we've seen from this report today. I guess from where I sit in my chair as an agronomist, Iowa had a lot of issues this past year, both wind and specifically drought. A lot of corn on corn ground was really unproductive. So much so that I think some really long-term rotations are going to be broken up, and I'm sure you've seen the same in Illinois. How do you think people are going to approach 2021 moving forward?
Right, and that's a fantastic question, and I know we talked about this a little bit here recently as well. Essentially, after you get through this report, the focus is going to turn pretty quickly to what's your spring insurance prices going to look like, because spring insurance prices a lot of times have a big function in what kind of acreage you're going to have, because you're looking at guarantees. What's a producer going to be able to be guaranteed? And so it's a good question. I'd say my team going into this report, and myself, I guess where my head was at is that we would see at least 90 million acres of both. And part of the reason I would say that 180 million plus, is that we've got profit margins again. Is prevent plant going to be a prevalent situation this year? Not unless the weather's just horrific. I mean, it's going to have to be worse than it's been, because when prices are bad, it's a little more acceptable as a producer to say, I don't want to fight this fight this year. But whenever you're looking at, November 21 beans, not far from 12, and or Dece 21 corn, 450 and above. Those price levels are pretty hard to to get too down on. I mean,
right.
You know that you can actually make really good money there if just looking at insurance with some of the APHs a lot of us have had over the last few years. And I know you guys had a rough year this last year, but in the last 7-8 years, a lot of your APHs have really built because you've had really good yields over the last several years. So, your guarantees as far as income are concerned are actually going to give you the ability to go to the banker and say, hey, I need to borrow money this year, but worst case scenario is I collect insurance and I make money. And the first time we've been able to say that in many years, as far as the general producer. Now, yeah, I understand someone who owns all the ground is paid for, has been in that situation, but very few of us are in that situation, unfortunately. So it's a really good thing to have. What's my best guess today? I would have to think that you're looking at 91 of each, give or take. And I think that, as we've talked about previously, maybe swing acres aren't as large this year as what they've been in some years because we had such a good fall. There's a lot of work that was done. Some of those corn acres are locked in. We know that. But I think where there's swing acres, I'm like you, some of these bean incomes and some of Mother Nature's, input on this situation, as far as what you guys went through last summer, I think is going to shift more acres to beans maybe than some people are thinking. So, I could see bean acres as much or more than corn, especially if these price levels on beans continue like they are, because it's pretty exciting for producers to look at those kind of profit margins.
For sure. And Matt, probably same we're in your region too, but this past year, despite all the challenges, most guys were a decent August rain away from maybe raising one of their best bean crops ever. We've been able to grow really good bean crops here the last several years, even as corn has been challenging. So I'm kind of like you. I see things the same way. Any other just overall thoughts? I guess what are you most interested to dive into this report a little bit deeper to look at?
I think we need to talk, on beans just a little bit. I mean, I think the thing about it with beans is that there wasn't a lot of changes made. Essentially the USDA dropped bean production a little bit. And again, that was kind of a change that I'd been calling for, at least a minor drop. And the reason for that, and you're an agronomist, so you understand this well. When you have a dry August and a dry early September, I mean, unfortunately, it just, whereas some people had 80 bushel beans in our part of the world and they were thrilled to death. Don't get me wrong. They weren't complaining. Some of those guys were talking 100 bushel beans. Some of those guys and gals thought they were going to ring the bell on yields they'd never seen before. But, August had something else to say about that. And so,
Yep.
you trimmed back those really early planted high yielding situations back to, still a really, really good yield. Let's not fool ourselves. And then your
Mhm.
little bit later planted soybeans, some of those beans didn't yield near what we were hoping they would, because they went through a really tough weather situation when they weren't quite as far along in their development. And so,
Right.
I don't know. I guess the bottom line for me is whenever you're looking at bean yields like we have, oh geez, I feel like the genetics on beans have done so much over the last several years, whereas for corn, for several years in a row, it's like they got all the limelight, right? I know corn
Yep.
yields are really good. We all know they're really good, but it's exciting when a producer can harvest 70 bushel beans when they've got a 55 APH, or harvest 80 bushel beans when they've got a 62 or 65 bushel APH, and that's pretty much what we've seen. So there's a lot of excitement there, and I think moving forward, this report putting the kind of tacking the gains on that we saw today is
Mhm.
going to do nothing but, in my opinion, boost soybean acreage and excitement about continuing to maybe get beans a little heavier in the rotation moving forward, than what we've seen.
Yeah, one thing I was continually surprised by, Matt, counties in Iowa that got 7 or 8 inches of rain total through the usable part of the growing season, guys were still able to pull 48 to 55 bushel yields out of those fields that were dried up and where corn had given up months prior. So
Yeah.
that's one thing I'm tracking for next year too. Soybeans can pause flowering if conditions aren't great. They seem to be a little bit more able to adapt to those changes. So definitely something to keep in mind is for producers if we're going to stay this dry, which is kind of what the weather's calling for.
Yeah,
Um,
absolutely.
well, Matt, those were the big questions I have. Is there anything else you wanted to cover?
Yeah, I just thanks for being on here. I think there's other things that obviously we can cover. Today was, quite frankly, one of the biggest reports. It's the biggest report of the year, but may have been one of the bigger reports any of us have ever seen. And it could have pretty big impacts moving forward. And so, as we get to wrap up, I think one more thing I'd like to say, and you're not going to be surprised because we've been around each other a few times before, but we have to, as producers, be very cautious as to get wrapped up, in the bullishness of this marketplace. And you know what? Let's take advantage of some of these prices. Let's take a little risk off the table whenever we have an opportunity. It's a really great thing, but one of my mentors always used to tell me a rally is not a rally unless you sell some crops. And so, Matt, what's the best way we can get a hold of you? What's your Twitter handle, or what's your preferred method of communication if people have questions for you?
Sure. You can find me on Twitter at mnelson_ISU, or you can shoot me an email. I'd be happy to respond and have a chat. My email is matthew.nelson@bayer.com.
Okay. Yep. Thank you for that. And again, you know how to get a hold of me, but I want to remind everyone about our weekly updates. And we actually come out about 3 times during the week, Tuesday mornings, Thursday mornings, and on the weekends. And a lot of you guys and gals already read those, but feel free to sign up for those at channel.com. Thanks for joining us today. And let's hope we can keep this ball rolling.